Welcome to the Investment Markets Overview for the week ending the 9th of December 2022. The Producer Price Index, or PPI, is a measure of wholesale inflation, whereas the Consumer Price Index measures the changes in the price of goods and services paid by consumers. But is this definition correct? PPI for November was released this week, and despite being unchanged on the month, at 0.3%, the markets tanked. The major U.S. stock indices fell, bond yields spiked higher whilst dollar gold jumped in what had been a disappointing week prior to the data release. Ironically, PPI has fallen for a fourth consecutive month on an annualized basis, so why the upset for the financial markets? This week's overview offers some clues. The overview includes the performance statistics for the main stock indices, which were mixed, as were cryptocurrencies and the commodities covered, whilst sovereign bond yields were higher in the main. Meanwhile, the regional coverage expands on what is driving US PPI. Further clues from the G4 central banks, led by the ECB. Whilst out east, China reverts back to deflation. Returning to US PPI and CPI come to that, a glance at money supply tells a different story to the general expectation of ever higher inflation. The majority of investors, economists and market analysts who believe that headline inflation is driven by the cost of goods and services, one look at the final chart of this week should dispel the myth. M2, which has been lagged by 16 months, has led the inflation measures up and now suggests the CPI and PPI are about to crash lower. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. We strive to turn the technical into plain-speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview published at least 40 times per year. Just follow the links provided for the overview and the latest investment timing solutions provided.